Holy smokes, everyone. The US is now facing something far, far worse than a recession. What could this be? Could I be talking about a depression? Could I be talking about hyperinflation? Could I be talking about a reverse market crash? Well, there's so many things we need to discuss that's happened over the past 2 weeks because things are escalating and things are escalating massively, and you need to be informed on how to protect yourself and protect your finances in these turbulent times. So everyone, we've got so much to cover, so much news to go over that's happened over the past couple of weeks. So let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, first things first, everyone, we need to talk about this. Unlike they're saying the economy is weakening, and this is not just happening in the US, this is happening around the world, and we are seeing central banks panic. I'll go over the latest Federal Reserve rate cut in a moment, but it's not just the Federal Reserve. All central banks around the world are panicking, and they're about to do huge amounts of stimulus like you've never seen before. So look at this. September consumer confidence falls the most in 3 years. So the Conference Board Consumer Index slid to 98.7, down from 105.6 in August, the biggest 1 month decline since August 2021. Now, respondents' concerns focus mostly on jobs and inflation. Because look at this, those saying jobs are plentiful continue to decline, falling to 30.9% from 32.7% in August, while the jobs hard to get measure rose to 18.3%, up from 16.8%. And I went over in my last video about the latest jobs report. Even they can't hide it in the official jobs data that jobs are weakening, but they're missing the bigger picture. It's not about how many jobs you're creating, how many full-time jobs you're creating. You could create 10 million part-time jobs where people are only working 5 to 10 hours a week, but that does not mean your economy is strong. That does not mean things are rosy and things are good. If you actually look at a better measure, full-time employment has plummeted by 1 million jobs and is declining rapidly. Now on inflation, the 12-month outlook rose. So I thought the central banks are saying inflation is going down, but I think you all know when you look at rent, when you look at groceries, everything mandatory like insurance, healthcare, to survive, that is still going up and going up rapidly, with concerns over price increases topping the list of economic concerns. So that's exactly right. Things are going up, but your wages aren't going up. And that's why they want to keep immigration going up, because immigration keeps cheap labor. All your costs go up, but these big mega billion-dollar corporations, their costs for labor go down because people come over that are happy to work for $10, $15, $20 an hour. Now, the proportion of consumers anticipating a recession over the next 12 months remain low, but there was a slight uptick in the percentage of consumers believing the economy was already in a recession. And that's what I'm hearing a lot of. I'm hearing a lot of people saying it already does feel like a recession. Let's go over to this. The Federal Reserve has now slashed interest rates by 0.5%, which I'm sure you already know. But unlike what you may know, why do you think they did such a big cut? It's because things are far, far worse than they're leading on. We are in a recession. It's just that they can change the definition of a recession whenever they like, it seems. We all know that the jobs market is about to go very, very bad. And the Federal Reserve knows this, and this is why they're doing aggressive rate cuts. But when they cut, it's not because things are good. It's because things are about to get really, really bad. And the last time they cut this aggressive was during 2008 and COVID, right before we saw massive stock market decline. So it is not always bullish, and we still have to be very, very concerned. But it's not just the Fed. China moves to cut mortgage rates to revive its slowing housing market. Remember, I did all those videos on Evergrande saying there's going to be a huge housing crash in China. Well, it's already happened, people, and China's definitely tried to hide it, tried to cover up the data, but we all know their housing market is in a severe, severe recession. So China took steps to lower borrowing costs on as much as $5.3 trillion in mortgages for millions of families in its latest attempt to shore up troubled property sector. The homeowners will be able to renegotiate terms with the current lenders effective on November 1st, the People's Bank of China said in a statement late Sunday. And those who chose to fix mortgage rates can also renegotiate new loans based on the latest loan prime rate, a reference rate for mortgage loans, according to the statement. Now, the plan, flagged as part of a broad stimulus package earlier this week, underscores Beijing's determination to end the prolonged housing rout that's dragged on growth in the world's second largest economy. Now, I've been warning about this forever, that when China goes down, a US will follow, and we're seeing how bad the US economy is doing now. And China started slashing, and now the US Federal Reserve is following them, and they're slashing interest rates as well. We've also got escalations happening with the Israel-Hamas conflict. Now it's getting more tense in Lebanon. So Nasrallah's killing reveals the depths of Israel penetration of Hezbollah. So we're seeing more and more Hezbollah leaders getting assassinated. And this is going to lead to an escalation in the global conflicts, which just makes the geopolitical landscape much more complicated, and maybe another reason why central banks know they need to stimulate now, because if war continues to break out across the world, consumer confidence will continue to fall, and governments are going to need cheap debt to fund these conflicts. And you may be wondering, well, okay, what can we do to protect ourselves? Well, the Chinese know things are about to get very, very bad, and they could be about to start another gold mania buying frenzy. And that's exactly what they are doing. So he goes on to say here, a few weeks ago, he published an article, The Potential of a China-Driven Rally in Gold that could quickly push the price to $3,000 an ounce. So why do you think they're doing this, everyone? Because they know that the US is not very happy with them right now. They know things are escalating with the Russia-Ukraine conflict, and they're trying to protect their assets, because when things get very, very uncertain, people rush to the safe haven, and that is gold. Now, also, when central banks start slashing interest rates, that's very bullish for gold and silver as well. Observations that China's future traders were driving the force behind gold's explosive $400 surge this past spring. And that's right, gold has been on a violent rally, and I've been warning you all that this would come. However, these traders had been dormant for the past 5 months as the yuan price of gold stagnated. So we've got some charts here to show why things are looking very, very bullish. So to see this chart here, we can go ahead and bring this up. This is the gold futures. This chart of the Shanghai Futures Exchange, the primary driver behind the gold frenzy in March and April since the peak, prices have been within a well-defined trading range. However, in a promising turn of events, the contract has recently experienced a technical breakout as Chinese traders returned from mid-autumn festivities, which had closed the country's financial markets for 3 days. Not only that, but this. In April, Financial Times article called Chinese Speculators Supercharged Gold Rally provided a compelling explanation on the gold price surge this past spring. In the article highlighted how trading volume in Shanghai gold futures had surged by 400%, propelling gold prices to record highs. So everyone, what you need to know is you need to know things are about to get very, very bad, and you need to protect yourselves right now. And I cannot overstate the incredible situation that gold and silver is in right now. And history is quite clear about the performance of gold stocks when there are rate cuts happening. In 1989, the Fed eased and gold stocks rallied 50%. After the dot-com bubble burst, Greenspan lowered interest rates and gold stocks nearly doubled in 6 months. In 2007, when Bernanke cut interest rates, gold stocks were nearly up 70% in just 150 days. And more recently, when Jerome Powell made his monetary U-turn in 2019, gold stocks rallied again. And I'll bring up a chart here because it's quite clear that cutting interest rates is a catalyst for high stock prices, and gold ETFs are breaking out to their 52-week highs. Now, gold spot price is an all-time high, with Bank of America predicting it will hit $3,000, and silver spot price is trading over $31 an ounce. It's a multi-year resistance. The dollar index is trading at its 2024 lows, and gold stock ETFs are trading at 52-week highs. And my alert concerns a stock trading within a few cents of its all-time low. And get this, it has no debt, $8.2 million in cash, a stock price of $5.81 a share. The stock is down 22% in 2024, 35.5% in the past year, and 62% from its all-time high. And get this, 42% from its 2023 IPO price. Now, the sponsor of today's video is US Gold Mining, trading on the NASDAQ stock exchange with US stock ticker symbol USGO. And get this, at its IPO, they raised $20 million from investors at $10 a share, and one can purchase it for just $5.89 today. But what's the big difference and why are things looking so good right now? Well, in 2023, when it IPO'd, gold was only around $1,900 an ounce, where today gold is worth around $2,600 an ounce. The company has a market cap of $71 million. Their flagship copper-silver projects includes 3 gold deposits totaling 3 million ounces of gold equivalent in indicated category, plus an additional 3.4 million gold equivalent ounces in the inferred category. This company's market cap is $71 million. Their flagship gold-silver copper project includes 3 gold deposits totaling 3 million ounces of gold equivalent in the indicated category, plus an additional 3.4 million gold equivalent ounces in the inferred category. In 2010, the market capitalization of the previous owner of the Whistler project, located in Alaska, peaked at $125 million. Right now, with gold trading at $2,600 an ounce, 33% higher than in 2023, yet the asset is now owned by a company with a market cap of just over half the size of that of the previous owner. So I believe this is a crucial alert. Now, get this, US Gold Mining, again, stock ticker symbol USGO, is down 62% from its all-time high and trading near its bottom just set weeks ago. Now, I want to bring up a photo. This is an iconic photo above of Trump, still wounded by the shot, is shaking hands with Mike Dunleavy, the governor of the great state of Alaska. And I tell you this because Mr. Dunleavy is also in the next photo. In this one, Governor Dunleavy is visiting the company's Whistler project in Alaska with Mr. Tim Smith, CEO of US Gold Mining. Tim Smith came to US Gold Mining from Newmont, 100-year-old gold producer, the largest gold mining company in the world. Before Newmont, he worked for Goldcorp, one of the biggest gold producers in the world. Then they merged. But I want to talk about the company that he worked at before joining Goldcorp, because what he accomplished there is precisely what the board of US Gold Mining expects him to deliver for the second time. He worked for Kaminak Gold Corporation. Kaminak discovered the coffee deposit in the Yukon and advanced the resource until Goldcorp acquired it for 520 million Canadian, one of the most legendary buyouts of the past decade. So Mike Dunleavy is working to build access roads to support economic growth in Alaska. Specifically, he wants to build the West Sazenta Access Road, which will link Whistler with the transportation infrastructure in south central Alaska. Now, Governor Mike Dunleavy said the West Sazenta Road is important for local residents who are gaining fair access to hunting, fishing, and potential jobs. And his administration is consistently looking at ways to grow their economy, and this project is a great opportunity for not only South Central Alaska, but the entire state. And he's committed to the project and unlocking resources that benefit all of Alaskans. Now, get this, Mike Dunleavy flew with Donald Trump on Air Force One and met with him after the Butler rally. Now I want to show you another chart. This chart clearly shows that real rates are topping off, and the previous time this has occurred, gold surged and silver had broken out big and mining stocks rallied massively. And this is what Mike Harnett, the chief investment officer of Bank of America, serving some of the richest and most affluent men alive, is saying. Now, under the fiat monetary system, when this chart above the red line, gold stocks soar. The one time this chart was above the blue line, gold soared by 2,400% in the decade that preceded. So everyone, to put it very, very simply, Gold Mining Inc. is trading at its near all-time lows. Its CEO was instrumental in selling the Coffee Gold deposit owned by Kaminak to Goldcorp for 520 million Canadian in 2016, with a small resource at a spot price of gold about half of what they are today. And while we are talking about different mines and outcomes could be different, this is the reason he was appointed to CEO of USGO, so that he can utilize his skill set and deliver similar or better outcomes to its shareholders. So start doing your due diligence on USGO today. So everyone, what do you think about all of this? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.